Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the cryptocurrencies. So you can see on the monthly chart, this market has hit the predefined support area that we discussed last week and shows some minor pullback, some reaction has happened. At the same time, on the weekend, we have taken a look at the fundamental background of the United States economy in some cash flows that we see currently among the different markets. I mean, bond market, stock market, and how it relates to the Fed policy. All this stuff I have discussed in the weekly report. So if even you are trading mostly the cryptocurrencies, the fundamental background might be very interesting and important to understanding of the ongoing processes in the economy right now. It's just because whatever market stand here and wherever market you are trading, the driving factors currently stands the same, because this is global economy shift. It makes no big difference between the markets because they make the same impact on all markets in general, whatever it's Forex market, gold, or cryptocurrencies. Conclusion here is simple. Fed is just sucking the liquidity out of all other markets to the bonds, just because they vitally need the liquidity to support the dropping bond market and rising yields, because the natural demand for the United States bonds have dropped significantly because nobody wants to buy it with the negative minus 8% real interest rate. And Fed vitally needs the money. They can't print it anymore. And even they have started to triangulate liquidity by the starting of the quantitative tightening policy. When they, additional to the new issues, they will start selling the old bond issues that they have currently on the balance sheet. So that will lead to increasing the supply on the market even more. So this is really difficult situation, and all other markets currently is treated just as a source of the liquidity. And the worst market is the more it is looking like and is treated like source of liquidity. So that's why you could see the big drop on the stock market. You could see the collapse on the cryptocurrencies. And actually, we talked about this. I will show you the chart. So it's actually, this is the combined cryptocurrency market. It has lost 60% of its capitalization right here. And this performance just confirms what we have said last year in the beginning of the year, when we saw starting to see the weakness on the market. It's just investors treat the cryptocurrencies like the not very good stock. So this is some secondary role in the portfolio, too much volatility, low liquidity, recently low liquidity, or relatively low liquidity. And this is the primary sort of liquidity for any event when you need money to refinance debt, to invest in some bonds or something. First, market will start selling cryptos. So, it's another confirmation that take a look, the correlation with the Nasdaq has reached 95%. So it's almost pips to pips moving together with the Nasdaq market. Here's Nasdaq, it's dropped 25-30% this year. The largest drop since the subprime crisis in 2008. So this is what we have the fundamental, and this process is not over yet. It's still going. I do not see really light in the end of the tunnel by far. It's just because Fed needs much more liquidity to support the current market. It's definitely have the problems with it. This confirms our suggestion, guys, what we said last week. If you remember, we said that we have the weekly pattern, checksel that is ABCD, that doesn't exclude the possible drop to the OP. It's 12 even area. And as market shows weak reaction here, these chances becomes higher and higher. In general, this collapse that we see on the monthly chart back to the yearly pivot support, one major support, this already seems important, especially because market actually has erased the previous tendency, forming the bearish reversal swing here, erasing this major ABCD pattern and just putting in the trash the former setup with the suggestion in hopes of investors the market could proceed higher and form at least here some kind of a free drive or something with a 74 target. So all this stuff right now stands in the trash basket. So here will be nice if market will be able to stay somewhere in this area and will not drop more. But with this recent performance, the risk that this could happen have increased. We are not pessimistic currently too much and hope that maybe situation could change, but the things that we see on the fundamental background looks not very pleasant. On the lower time frame, what we have on the daily chart, we've got the pullback, but we said since overall sentiment stands bearish, we should not be too hurry up to taking the long position if you see the bounce. First of all, we have to get the bullish pattern to deal with that we haven't got yet. Besides, today on the daily chart you could see market giving a hint on the possible bearish grabber. So if we would get the grabber, it means that market could drop below these lows. It doesn't mean that no reaction on the 26 target will be, but it means that market could start forming some patterns with the new lows. It might be the butterfly, it might be head and shoulders, even double top with the double bottom with the washing rinse of these lows also is possible. So whatever it will be, the grabber tells us that we should not take the long position right now and do not treat this action as a retracement back of this initial upward action, because grabber suggests dropping below these lows and this will not be the retracement. So this is really important sign that we are getting right now. And today in the evening we have to control where the market closes. If it closes like it's done right here, forming the grabber, it tells us that no long position should be taken right now. So on lower time frame, approximately the same story. For example, if you'll take a look at the hourly chart, in the first glance, you could see that probably we have the head and shoulders pattern. But in reality, this head and shoulders has really big problems. So if you'll take a look at the performance around the neckline, this market right now stands around it. And this is happening. This market hasn't completed the target. It's returning back to the neckline. This is bad sign. I wouldn't talk even about the very skewed hand and shoulders. So on the 4-hour time frame chart, it's even hardly recognizable. So this is also signs of weakness here, and I wouldn't rely on it currently. Besides, performance of the right arm, as you can see, significantly slower than this one. Besides, here, as you could see, also market has formed the butterfly on top is already turning down, so which is actually also not good sign. On the 4-hour time frame chart, as I said, you even can't recognize these head and shoulders. With this ABCD pattern, another signs that I do not like it is that market actually has reached only 31 resistance, turns down, and actually hasn't reached even the 618 extension. Even minor upside extension has not been completed. If with market format, the hand shoulders will get the much better shape as we have right now. So what we could say on all this stuff, we think that taking the long position here, it seems too risky. It's need to see the clarity at least with the grabber that market is forming right now. Speaking about the bearish position, well guys, since you're trying to anticipate the appearing of the grabber, theoretically you could do this with the placing initial stop above this area, or maybe about the 618 extension. It's also possible to consider, but you have to control what will happen by the end of the day. If no grabber will be formed, the market return back up, you will have to close your position. So that's the major risk. So currently everything looks really nice for the bears, but we do not know how situation will go through the day. And this choice is up to you whether you would like to anticipate taking the short position or not. But if you will be right, this might be a really great risk-reward combination. It's just because in this case market dropped below the A, which will be very significant distance. So this is set up for a short term, and let's keep watching whether the market will be able to show something around this major support area.